Well, joining us now with more on the outlook for global wheat supplies is Sudakshina Unnikrishnan, Commodities research analyst at Barclays Capital. Thanks very much indeed for joining us. First up, where are we with this? And you've seen the run-up in wheat prices. Does it just get worse from here?
No, I think that's a very good question. Yesterday's USDA report was pretty aggressive in terms of its cuts to global wheat production, and that has added to concerns that we are going to see a lot of production downgrades taking place. It appears that the worst is not behind us, and we could see further reductions in terms of production estimates. Adding to that, of course, has been market fears being spooked on the back of these export restrictions being put by Black Sea countries. So Russia already announcing a ban in terms of grain exports till the end of this year, potential action being taken by other countries like Kazakhstan and Ukraine as well. So I think all that makes for a pretty volatile and choppy environment for wheat prices and grains prices globally. So I don't really think we've peaked out in terms of prices as yet. I think following yesterday's report, following the continuation of hot weather conditions in Russia, I think there does appear to be further room on the upside for wheat prices.
So, Dakshina, when do we actually seeing it filter down, though, to what the average person is paying for their cereal, let's say, in the morning?
Yeah, there's often a pretty long lag in terms of the underlying commodity price going up and that actually being translated into higher costs for groceries, translated into higher inflationary expectations. So far, what we've had so far has been a rather brief spike in terms of prices. It's nowhere close to the sort of period that we saw in 2007, 2008, where you had a sort of, few consecutive months of continued growth in prices, which then led to higher grocery prices. So I think in terms of retail prices, we're not really at the level by which we should see a swift response in terms of grocery bills or inflation. We would need to see these sort of price levels being sustained, at least for a few months, till you see consumers actually taking a hit on the back of higher commodity prices.
Yeah, and what about the countries, the individual nations here as well? Which are likely to be affected the most? I guess it's those countries which import most of their wheat.
No, that's absolutely right. Because if you look at big countries like India and China, then both these countries have more than sufficient amount of wheat stocks at place now. They're not really going to be hit very hard in terms of the production downgrades or the tightness in the export market that we're seeing. It's primarily going to be countries in parts of the Middle East, which have been traditionally reliant on Black Sea exports and Russian exports in particular. So those are the countries which are now going to have to pay a higher price because US wheat exports are costlier than Black Sea exports. So that sort of shift in terms of trade compositions is going to be impacting Middle Eastern countries and other parts of Africa, for example, where you do see countries being reliant in terms of wheat. Larger sort of emerging markets, India, China, Brazil, the US, a lot of these are very massive producers of wheat as well. So they're unlikely to take any sort of pain on the back of higher prices. It's going to be import-dependent countries. Countries like Egypt, for example, the world's largest importer of wheat. Other countries in parts of the Middle East, Algeria, Lebanon, Tunisia, these sort of countries.
Very quickly as well here, what about the spillover, pardon the pun if you like, into some of these other agricultural commodities?
Yes, I think that's been something that's been oft overlooked so far, because if you look at the interlinkages across the grains complex, lower wheat supplies also translate into higher demand for corn, which is used as a substitute for wheat for the poultry and livestock industry as feed. If you look at the rally that's taken place across these markets, then it really clearly shows, both on the supply and demand side, that tightness affecting the wheat market is going to spill over into the soybeans market to a small extent, and more importantly into the corn market. So I think we are looking at higher prices, especially for corn, from current levels on the back of wheat supply shortages. The supply side as well is going to be affected because with wheat prices rallying so strongly, we are going to see farmers globally next year preferring to plant wheat at the expense of other crops.
We're out of time, but thank you so much for joining us. Sudakshina Unnikrishnan there from Barclays Capital.